Hi guys, welcome back to my channel. In today's video, I'm going to go through how I set my entry and exit points for you guys. I'm going to literally go through how I build my daily watch list. So every morning I do set my entry and exit levels ahead of time. So if I'm watching Tesla, I'll in my watch list, I'll put Tesla calls above this level, puts below this level. So mentally, I know I have a note of exactly where I'm going to enter Tesla for calls and exactly where I'm going to enter Tesla for puts, and then my profit targets afterwards. So those profit targets are places or areas where I'm going to exit for a profit, and then obviously I'll have a stop loss for that play as well. So I'm going to go through how I set those initial levels, which I've gone through in a couple other videos, but I'll go through it again, just review it really quickly. I'll go through how I set those initial levels in the morning, and then how I get those profit level targets and my stop losses as well. So I think this is an important video to go through because a lot of people struggle to take profit when they are supposed to and end up getting greedy, or struggle to cut their position once the stop loss is hit. So I'm going to go through some of the psychology side of that as well, and sticking to your trading plan and why that's so important. As always, don't forget to like and subscribe to my channel for more content. If you guys have any other video suggestions, go ahead and comment them down below, and let's go ahead and get started. So we're going to go ahead and go through, like I said, how I set my price targets and my initial entry levels. So I've gone through my initial entry levels before, but I'll just recap before I go into how you set your profit targets and potential exit plans as well. So I always start on the 15-minute time frame with any stock that I want to trade for the day. Let's say I find out that Tesla has a catalyst on it and I want to trade Tesla for the day. I always go to the 15-minute time frame, and let's say we're looking at just today. I want to see the pre-market high, pre-market low. So if I was just going to trade Tesla on the day today, I would trade it below this pre-market low of 218. So I would wait for Tesla to break 218. Whoops. For puts, and then to the upside, I don't really like this 225 level here. It does look like a small level of resistance. However, it looks like Tesla in the pre-market is really close to that 225, so I don't want to risk entering so close to open, so I'm going to move it to the next level of resistance. The next level of resistance above this 225 pre-market high would be 230. That's a level that I have previously charted on Tesla. So one thing that I do want to say is you do need to have your stocks charted. So I would start from the 3-year weekly all the way down. I do have a charting video. I can make an updated one if you guys would like, but always make sure that you have the stock charted. None of this is going to work if you don't have your stock charted already. So make sure that it's charted, you have all of your levels set, and then you can set your day-to-day price targets based on those levels. So like I said, Tesla is really close to its pre-market high of around 225. So I'm not going to take that as my initial entry for calls because it's too close to open. It could potentially break 225 very close to open, and that negates my initial entry plan. So I want to set it a little bit higher than the 225 just in case it breaks very close to open. You'd never want to enter a trade so close to open or right at open. So the next level up of resistance that I have on Tesla is going to be 230. So my initial entries on Tesla to the upside for calls, a break of 230 for calls, and then a break of 218, which is the pre-market low for puts. Once I have my initial entries, it becomes a little bit easier to kind of find the targets and price targets. So let's say I enter 230. My next targets on this play initially are going to be your next levels of resistance. So 230 is your first entry level. You enter Tesla calls at 230. The next level of resistance that you have up is 233. So that's going to be your first profit target, and then 235 is going to be your second profit target. I always set at least 2 profit targets for any scalp that I take, any day trade, anything like that. I always set at least 2 profit targets. So my first profit target on this would be 233. The second profit target would be 235. Those are my next levels of resistance up. So let's say you missed the initial 230 break on Tesla. So you missed the initial 230 break. The next level up that you have is 233. Now I wouldn't enter at 233. I would actually wait to 235. And the reason behind that is 233 to 235, you only have about a 2-point move that you could potentially catch. However, above 235, the next level of resistance that Tesla has is 240. So that's a 5-point move up that you could potentially catch on Tesla versus a 2-point move up. So the R to R here from 235 to 240 is going to be higher. The risk to reward is going to be higher here from 235 to 240 than from 233 to 235. Even if you were to set your stop, let's say you enter at 235, your stop is 233. That's a 2-point move down versus a 5-point move up. So 5-to-2 risk to reward ratio, which is really, really good. You always want at least, for newer traders, I would say 3-to-1. Anything above that is going to be a higher risk to reward ratio, which is going to be a higher probability setup for you to take. So let's say you're looking for Tesla to the downside. So you want to trade the 218 break to the downside. That's your initial level of resistance. And if we zoom out of the 15-minute time frame, you can see that 218 is the low on the 15-minute time frame. So I have to look at a higher time frame in order to analyze where my next profit target is going to be if I enter the 218 break for puts. And if we keep looking up, so let's say we go to the next lowest, our next highest time frame is 30-minute, 218 is the low. Hourly, 218 is still the low. 4-hour. All right, right here, 4-hour, 218 is not the low. So if we look here and we zoom in, so below 218, Tesla looks like it has a wick to fill to around 216, okay? So if we zoom in here, this is the wick that I'm talking about. So below 218, the next level down on Tesla I have is 216, and then below 216 looks like the next level down we have on Tesla, and my Tesla chart is not charted properly, so I apologize about that, is I would do 213 here, okay? So 213, 214 probably, actually I would round this up. So below 218, you have a 2-point move to 216 and then an additional 2-point move to 214 or 215 area. So those would be your profit targets to the downside. If Tesla breaks 218 to the downside, you enter for puts. Your first profit target is going to be 216. Your second profit target is going to be 214. Now, on the higher time frames, once you get to the 4-hour daily time frames, you do want to give the stock a little bit more room. It does tend to move because it does have a little bit more room on those higher time frames. So from 216, this could actually potentially drop all the way down to around 210. That would be the next significant level of support on Tesla. That's also a psych level on Tesla, so we could potentially see a drop there. So whenever we get to higher time frames, so let's say, like I said, the 218 was the low on the intraday time frames, but and not the low on the higher time frames. So if we get to the higher time frames to see what our profit targets are going to be, I usually tend to set them a little bit further apart, just because it is a higher time frame and the stock does have more room to move to the upside or downside on those higher time frames. So my initial target, just because this is a wick to fill down, would be 216, 213, and then if I were to hold runners on this put play, the 210 would be a psych level on Tesla, and that would be the level that I would hold runners until. Now, let's say that, excuse me, let's say that you're day trading a stock, okay? So you're day trading a stock and you want to figure out what profit targets to keep on that day trade. There's a couple things that I go about doing. So whenever you're day trading, you always want to look at the higher time frames, 15-minute and up. You don't want to look at the intraday time frames just because you are day trading it, so you're not looking to be in the trade for 5 minutes or 10 minutes. You're looking for hour, 2-hour, 3-hour day or the full day trades. So I usually watch them on the 30-minute or higher. So you go to the 30-minute time frame, look at the levels that you have, and always what I personally like to do is, when you're day trading a stock, what you'll notice is that if the market is trending up or down, that stock tends to hit psych levels. So what I mean by psych levels is those whole $10 or 100-point levels on any stock, or sometimes 5-point levels depending on the stock and how it moves, are going to be your psych levels. So on Tesla, you have your 230, 240, 245, 250, but usually the 10-point levels on Tesla are psych levels. So whenever you see Tesla have a move up or down and is a trending day in the market, it tends to hit those psych levels, those psychological levels. And if you look over to your options chain, you also notice that at those, and I've gone through this before, at those psychological levels, you have a lot of open interest and volume. So when you are day trading for the day, let's say the market is trending up today, okay, and I want to enter a day trade on Tesla. It breaks my initial level of 230. That was my initial level for calls. I want to enter a day trade on Tesla, and I want to figure out what my profit targets are going to be. So let's say, I enter at 230. I have a profit target of 240 and 250, and then above that, 260 and 270. So if we go over to the options chain here, I enter at 230 on Tesla. I want to see where the next, at what strikes Tesla has a decent amount of volume in open interest that is significantly higher than the strikes around it. And if we just look around, you can see that the 230 strike where I enter does have high volume and open interest. And then below that, we have the 240, which was my next profit target, also high volume, open interest on it. And then 250, again, high volume and open interest. So you are going to see that at those psychological levels, you are going to have more volume and open interest. That's also going to give the stock the momentum it needs to be able to get to those profit targets. So my point being here, whenever you enter a day trade on a stock, it's really, really helpful to look at the options chain and see at what levels, at what strike prices does the stock have a lot of open interest and volume on it. People tend to hold to those levels. People tend to take profit at psychological levels. That's why we call them psychological levels. People tend to take profit there. They're whole number levels are nice round numbers, what we all like to see. And that's why you'll see on the strike prices that those specific strikes, those specific contracts have a lot more volume and open interest than the other contracts. And what happens then is a stock, when it is trending, tends to hit those profit targets. So this is a really helpful tip if you are struggling to set profit targets on a day trade or even a swing trade. This is a really, really helpful tip to be able to set a decent profit target for whatever stock that you're trading and not have to get shaken out of your trade. So another example, let's just go through SPX here. So SPX tends to move in 5 or 10 point increments. So the one thing with SPX is that it does gap up and gap down a lot. So depending on how big the gap is, obviously when you see a gap, what the stock tends to do is it tends to fill the gap all the way through. Depending on the size of the gap and the increments that the stock moves in, obviously sometimes it takes a day, sometimes it takes more than a day, a month, a year maybe, who knows. But whenever I've seen a stock start to fill a gap, it tends to fill the gap all the way through without a stop or a hard pullback. However, with SPX, sometimes it doesn't fill the gap all the way through if it is a bigger sized gap. So in that specific case, whether it's a gap fill or a wick fill or you're trading SPY or SPX, you always want to set profit targets in between that gap, because what can happen is that it could reject at those profit targets or at those significant levels of support and resistance if it's not a strong trend day in the market. So for example, here on SPX has a gap to fill above 37.07 all the way up to around 37.45. So that's a pretty decent sized gap. It's about a 40-point gap. I would enter this position above 37.10. So the reason I would enter it above 37.10 is because 37.10 is the next level of resistance on SPX. It did gap down to 37.07. That's not a strong level of resistance. That's just the post-gap level of resistance that the stock gap down to. So I wouldn't necessarily enter at that post-gap resistance or support. I always wait for the next level of resistance or support that I have on SPX. That's just the safest play to take, because what can happen is that it could break this 37.07 and reject at 37.10. So you always want to wait until it breaks this significant level, because this is a level that you've charted before. The 37.07 is not a level of resistance or support that I've charted on SPX. It's just a level that it's created after it gapped down. So I always like to wait for the next level of support or resistance on SPX when it does gap up or down that's going to be my initial entry point. So for on SPX here, 37.10 would be my initial entry point. The gap fill is 37.45. So my targets are going to be every 10 points. SPX tends to move 5 to 10 point increments. If it's a strong trending day, every 10 points is going to be a profit target on SPX. So for gap fill specifically, I always like to use every 10 points for SPX. So above 37.10, first profit target would be 37.20, 30, and then the gap fill at 37.45. So those would be my profit targets on the way up. I know I have a level at 37.16. I have a level at 37.25, 35.45. So every 5 points basically up until the gap. However, with SPX, when it does have a gap fill, because there's no significant movement in between where it gapped down and the post-gap level, it tends to fill all the way through. So you want to give yourself some higher profit targets and not try to take profit at every 5 points, because it tends to fill the gap all the way through, especially if futures it's giving it to move. So you always want to set every 10 points on SPX for a gap fill. Tends to be a decent profit taking level. So I always do 37.20, 30, 40, or even from 37.10 20, 30 would be my profit targets, and then I would go to 37.45. So let's say you missed the 37.10 break on SPX. You wait for it to pull back at your next profit targets, your 37.20 and 37.30. You wait for a pull back. Once it pulls back, retest its EMA or retest the previous level of resistance. You then enter at the next level of resistance. So let's say it pulls back here at 37.25 and then it makes a move up. You can enter at 37.30 for the 15-point move up to 37.45. And at this point, at the 37.30, my target would be 37.45. My profit target would be 37.45 and 37.50. Those would be my two profit targets up. The 37.45 would be the gap fill. And then if you like to hold some runners, 37.50 and 37.60 would be the next levels up of resistance on SPX. Another thing that you want to pay attention to when you're setting profit targets is where your futures is trending with those profit targets. Let's say you're looking for Tesla above the 230 level. So you're looking for Tesla above 230 and you're waiting for the NASDAQ to break above its VWAP for entry. So Tesla above 230, NASDAQ above its VWAP. VWAP here is sitting at around 1130, okay, 11.030. So you enter Tesla, NASDAQ breaks its VWAP. You also want to pay attention to where the next levels of resistance are on the NASDAQ and ES, because what can happen is if Tesla breaks 230, let's say your next levels of resistance are 233 and 235 and 240, okay? What can happen is if you don't pay attention to where the next levels of resistance are on the NASDAQ could reject before Tesla hits those profit targets and Tesla could then pull back. So let's say next resistance on NASDAQ is 11,150 and Tesla is getting close to your 230, or you're in 230 puts, you lock some at 233, your next level up is 235, but NASDAQ is right at 11,150. So what that means is the NASDAQ has to break 11,150 for Tesla to be able to get to 235 and then to 240. So you always want to pay attention to where futures could potentially reject at their levels of resistance and support, because that can help you determine where to take profit on your stock. So if you do see, let's say, NASDAQ approaching VWAP and you're in calls, you want to anticipate that the NASDAQ is going to reject that VWAP level and you want to take profit soon at whatever profit targets that you have set. Or let's say the NASDAQ at 11,150 is your level of resistance and you're in Tesla above 235, your target is 240, but the NASDAQ is getting really close to 11,150. You want to anticipate to take profit at that point because the NASDAQ could potentially reject at its level of resistance. Another thing that I want to show you guys, and this was actually from today, so I think it's a really good example to show you guys, and I actually took this play. So SPX had a gap to fill today below. So let me show you. So this is the gap that it had to fill. The gap was below 3604 all the way down to 3585, okay? So I was watching SPX below 3604 for the gap fill down to 3585. My entry on this was 1222. I exited some of the position at 1253 and then the rest at 105. So what I was watching here, so you can see SPX when I entered a little bit prematurely on here. So I'm going to go to the 2-minute time frame because that's what I pay attention to when I'm in a trade. So here we go. This is the 1222 candle here. Nice move down. You can see my targets on this were 3,600 and then below 3,600 at 35.95 and then 35.85 for the rest of the gap fill. As SPX was approaching this 3,600 level, ES was also approaching a specific level of support, which was 3610. 3610 level on ES is a strong level of support and has been a level of resistance as well. So I knew that as ES was approaching 3610 and SPX was approaching a psychological level of 3600, I should expect a bounce at around 3600. Okay, so you can see here that at 3600, we did see a little bit of a bounce here, pulled back. It still held below its 9 EMA. ES slightly pulled back, still held below its 9 EMA. So if you did enter at 3604, no reason for you to get out. Just anticipate that there is going to be a bounce. You could potentially just take the scalp from 3605 to 3600 as ES is making the move down to 3610. Now the second thing, and this was the most important part of this play here, Rejected 9 EMA, continued down. I stayed in the position. At my first profit target on this was $35.95, so I locked some of my position at $12.53 on this candle. My runners I was holding until the gap fill. Now, I exited my runners at 105. So I exited my runners here on this candle right here as it approached $35.95. And you can see at 105, perfect rejection of 3600 on ES. So the reason why I exited my position on SPX, even my runners, is because ES was approaching 3600. I anticipated that ES could potentially hold that 36 level, and SPX could potentially bounce as ES is holding that 3600 level. So whenever you're trading SPX and SPY, you always want to pay attention to ES, and ES can help you identify profit targets and entry and exit plans as you're trading SPY and ES, so SPY and SPX. So like I said, as SPX was making the move down, I anticipated that ES was gonna bounce at around 3600. That is a psychological level on ES, and I exited my SPX position at 105 in anticipation of the bounce. And you can see that it did make a slight move down after that, but then it made a huge bounce, and SPX ended up reversing. ES held that 3600 level of support, that psychological level of support, and bounce. NASDAQ also bounced as well at low of day. So really, really important to pay attention to futures, and you can use futures to identify levels of support and resistance and identify profit targets for your positions as well. So if you're trading the tech sector, you want to look at the NASDAQ and look at specific levels of support and resistance on the NASDAQ. And as it approaches those levels of resistance and support, you should anticipate that the stock that you're in can potentially bounce off of those levels following the NASDAQ futures, or SPX and SPY following ES futures. All right, guys, so that's it for today's video. Thank you so much for watching. If you have any questions, comments, or concerns, you can go ahead and comment them down below. All of my social media, my websites, everything is linked below as well. Make sure that you're following the correct accounts. If you have any video suggestions, any content that you'd like me to make, go ahead and comment that as well. And I will see you guys in the next video. Bye.